The crude oil prices are up 2%, but more importantly that the OPEC and the allies interministerial meeting, which was called as an emergency meeting, the two-day meeting could not come out with a consensus. So it has been extended to a third day today with expectations that they will be able to come out with a scenario for the oil ministers on what step really they should be taking. As of now, we understand that Saudi Arabia is pushing for a minimum 500,000 barrels per day of a cut, in addition to 1.8 million barrels per day, which the OPEC and allies are doing right now. Also, there are estimates of weak demand from the transportation sector. There have been various reports out. BP says that 300,000 to 500,000 per barrels per day of a global demand is going to see an impact, which is 0.5% of the global demand, really. You have similar reports from Platts Analytica, from Capital Economics, who are forecasting a decline in global crude demand going forward, especially from China as well. But Peter McGuire, CEO at Exim Australia, now joins us for a discussion on that. Peter, hi, good to have you. So this really seems to be becoming a norm now where the OPEC and the allies cannot reach a consensus within the given time. We've seen extensions in hours and days now. What is your expectation? Because the markets are hinging a lot on what OPEC does, and the rude reaction really would be if they cut less than what the street is already working with.
Well, yes, so many moving parts, Manisha. Good afternoon. Look, I think what we're looking at is quite simply, we've got that demand destruction. We've seen what's going on as far as China. We understand the global ramifications. And only a week and a half ago, we were at $53, hit $49.50. It's bounced solidly to the upside now, back at 52. And now the meetings to see where we move forward. We've been watching it hour by hour over the last matter of days. And it seems to be, I think there'll be some form of, I think the sweetheart deal will be put together. There's no doubt that they'll talk it through because there just seems to be so much movement at the moment. It's really creating that whipsaw effect, and I feel as though that there'll be a consensus as far as some form of additional cuts.
So, Peter, what is your sense on China right now? What are we anticipating in sense of a demand destruction?
Well, first off, can you believe the numbers as far as coronavirus? Secondly, you've got oil down nearly 18% for the month of January. I mean, it was hammered to the downside. And then you're looking at as far as you're just coming back after the Lunar New Year and, consumption, is it going to pick up? So I think there's just so many different components there that's really creating a sense of nervousness across the oil sector. And that needs to be really looked at over the next matter of days and weeks, whether we're going to see, the market move stronger. Do equities come back, and do they get coronavirus under control, or does it turn into a further panic across so many different countries, leading back naturally to China?
Peter, final question is on prices, really, because we have seen crude prices move in a bear territory. We are 15% down for this year, and we are more than 20% down from the kind of highs that we saw in Jan itself. Yep. So is the pain all into the prices, or do you think...
Well, Manisha, that's a hard one. I mean, look, I wouldn't be surprised that it bounces another dollar to the upside, but I wouldn't be surprised after that if there's further bad news comes out and they can't get some sort of deal together from OPEC Plus, then you're going to see crude prices, I think, get hammered to the downside again. So, and you've got the coronavirus impact. So it's hour by hour. I will say this, traders are loving it. If you're on the right side of the market, it's absolutely fantastic. So that's really the attraction from a trading perspective, but from a producer's side, I think you've got to sort of see what OPEC Plus do.
So what is the worst case scenario? I mean, how much of a percentage slide can we see from here?
If you didn't get
a deal from OPEC
done by OPEC Plus, OPEC Plus, a deal's not done there, and you see further outbreaks as far as coronavirus, and far more significant over February and March, it'll be down to that mid-40 mark. There's nothing. I think the demand destruction and the fear factor will come into the market. It'll be like a geopolitical shock. But I'm not suggesting that, Manisha, but they're the outcomes that can happen. Just as easily could be $56 within the next matter of, by end of month, if everything is bolted together and there's some form of conciliatory action and they contain the coronavirus and it's not as bad as everyone makes, believes.